As venture funding has dried up for many startups, robotics have weathered the storm surprisingly well. The pandemic has fueled investments in the category as more companies look toward automated solutions, and this trend shows no sign of slowing anytime soon. We have a great trio of investors to discuss these trends. Please welcome DCVC's Kelly Chen, Playground Global's Bruce Leak, and Founder X Ventures' Helen Liang, along with TechCrunch's Natasha Mascarenhas.
Robots and the companies behind them have shaped our still very present pandemic in so many ways, from the groceries we get to how labor looks and how labor at least wants to look. And it's why I'm so amped today to talk about the investors backing the companies behind these big goals before we ever hear about them today at TC Sessions Robotics 2022. I'm Natasha Mascarenhas, a senior reporter at TechCrunch. I am joined by three top investors to get all of our big questions answered. So join me in bringing on Kelly Chen, partner at DCVC, Bruce Leak, founding partner at Playground Global, and Helen Liang, founding partner at Founders X Ventures. So great to have all three of you on the TechCrunch virtual stage. Thanks for making it. So I wanted to jump in with the first question, which is definitely a rewind to the beginning of the pandemic, if you guys can also remember it, because it's been multiple lifetimes. But I wanted to kind of get a high-level understanding of how robotics and how your work has honestly changed since March 2020. And so, Kelly, I thought I would start with you to understand a little bit more about what you've seen and kind of what that big story looked like during the beginning of COVID-19 to today.
Yes, so COVID-19 really broke the supply chain as we know it right now. We saw a lot of consumer behavior change. We saw labor supply and demand change. So with the supply chain and the problems, a lot of the robotics investing that we have seen has been quite reactionary. So some of the problems that were created during COVID were temporary in a matter of that time. And coupled with the kind of economic downturn that we see now and a lot of new robotics startups that have been funded, I do think that we will see some pain and consolidation in parts of the robotics industry. And then other companies that have been funded during the pandemic have been just quite game-changing, and they've created solutions that have solved long problems in the industry, even problems that were happening before COVID. So I think we're going to see two different routes for your robotics companies, and I think the future will be quite interesting. I think the great part overall about the pandemic, and it's really accelerated robotics and put it on the radar. So if we see capabilities today, they look so different economically, even within robotics, than they did 5 years ago. And I'm really optimistic about where the sector will go.
Great. I mean, speaking of five or 6 years ago, Helen, you started Founders X Ventures in 2016 with a bunch of Stanford founders. And I want to understand a little bit about kind of that vision in 2016. And then, 2020 happens. A lot of kind of how business looks and how business is supposed to impact the world has kind of been flipped on its head. So tell us your kind of version of the pandemic.
I think the pandemic definitely have changed people's perspectives and founders' perspectives, consumers' perspectives as well. For us, I think the robotics market has been a tough market, as everyone probably know. The founders in the beginning have a much higher expectation on the speed of market adoption. I think that has had some reality check in how fast a robotic startup can scale up, but that also offers opportunity for them to adapt. So we have seen a lot of learnings in robotics markets in terms of how you go to scale quickly. And the specific in the pandemic, what it caused is we have seen new opportunities to addressing the labor shortage, right? In terms of automation. So I'll give one example. One of the recent investment we made is a company called Charge Robotics. Surprisingly, the learning this. Even in California, right, with the renewable energy usage shooting up, there's a shortage of neighbors in how fast you can build solar farms. So this company is very new, is automating building solar farms with robots. So this is just one example. We're seeing the new opportunities kind of happened during pandemic.
Bruce, I would love your perspective here as well. I know that, you've been working across kind of deep tech, robotics, and I think when we prepped together a little bit of like the vertical integration of a lot of these big issues. So what would you add to kind of the picture that's been painted so far of how robotics has performed and been impacted through the pandemic?
No, thank you. I agree that I think that robotics is an evergreen technology, and I think that the opportunities there are durable. What we've seen is that companies that are focused on vertical solutions, ones where they're really going after solving a real problem versus just trying to get technology to market, are the ones that have the staying power. Eventually, robotics will exist everywhere, but trying to bring a horizontal solution to market where you're selling robotics as the solution to market, to customers that aren't used to buying robotics, I think is a hard push. But selling a solution, selling, same day delivery of groceries, selling, fulfillment, selling automation of life sciences, where you really understand the problem that you're going after, and you're not selling a technology, but you're packaging it as a complete solution and capturing more of the value for your startup.
I want to stick on you for a second because you bring up an interesting framing, which is kind of this difference between selling a product or selling a service that a product could deliver one day, hopefully. And I'm wondering if that pitch gets harder during, I guess, bringing us to today, the downturn, a lot of change, and a lot of generalist investors and the broader tech ecosystem all kind of having to focus on profitability and cash conservation. How does kind of that vision change or, get impacted by a big refocus, it feels like, in the tech ecosystem?
Well, I think that when you're selling a solution, it's all about return on investment. Right? There's, selling a product, the customer has to decide, how to make that economically work. Selling a solution, especially like robotics as a service, there's nothing to hide. You're taking all the risk of, uptime and reliability and throughput. And the customer is just getting replacement for what they can't hire today in the marketplace. And so, there's no place to hide the basketball. If you can't provide something economic, you're not going to have a business. And so the fundamentals of providing a solution force you to focus on economics first and make sure you're delivering true value versus just bringing technology to market and trying to have a solution looking for a problem.
Helen, it kind of jams well with what you're talking about when it comes to labor shortage, right? When you're we've heard that promise being kind of pitched by a bunch of startups over the years, but it does feel a little bit like there's a perfect storm coming of people wanting more labor options, and also there needing to be a better use case for robotics. What's kind of your view on that?
Definitely. So we view that's an opportunity, right? It's a major opportunity for robotics founders. I agree with what Bruce mentioned. I think that the founders in robotics companies tend to be more come from technology background, right? We tend to be more using we call technology push. Now, I think we practically see the model more about market pull. In that way, I think we actually can see probably faster market adoption. Instead of focus on what robotics arm can do, what certain robotics can do, focus on what problem to solve. And how big a problem can you solve? What's the best way to solve that problem with the right business model? And who are the initial strategic partners? So in a way, I think we see more opportunities there with this pandemic, specifically on labor shortage. The example I gave, that company building solar farms, we think we'll see.
Kind of, I guess, getting more into the specific kinds of business models we're seeing, or at least promises we're seeing being made by labor shortage focused startups. Helen, are there certain companies that I guess are giving red flags or kind of pitches that, no longer really have a shine in today's market?
Example will be, we used to see company will pitch just one robotic arm, right? Specific robotic arm for certain things, more like what we call horizontal approach. Say, can this automate, biology lab sample handling? I can also use this arm for restaurant food processing. That type of horizontal play, I think is much harder, like Bruce mentioned. We will see more vertical play, like another example we had is a company called Robotics. This is the two founders are working on develop a self-learning robot for kids with walking disability to learn to walk and adjust the strengths what they can take. It has been going a pretty interesting market adoption path. So I think we'll see more opportunities like when you focus on value creation, when you focus on scale from day one, right? How do you scale? Which market you can go in first? So the vertical play, we're going to see more companies like that.
Kelly, do you kind of disagree with anything that's been said so far on this front? Just to make things a little fun here, when you're looking at pitches, are you still interested in horizontal plays, mostly vertical plays? What does it look like for you?
For sure. So in terms of vertical plays, that's what I mostly would focus on. That said, that there are some companies that are focusing on a broad enough problemscape that they can be kind of viewed in between vertical and horizontal. So if you think about some of your, say, micro-fulfillment automation companies, they're broad enough to be cross-sector, but they're serving the same function. And then in terms of other places that, in addition to labor shortage, if you think about not just like human labor, but places where you can substitute labor that increases efficiency. So say when you think about a supply chain, supply chain starts at the raw material all the way to the transport and then manufacturing, warehouses, distribution. When you think about being able to gain efficiency in the raw material, as in like mining efficiency, and then from there having robotics and automation help with energy and material savings. So robotics can really play a role throughout the entire logistics supply chain. And in that way, you're thinking about not just a pretty narrow vertical problem, but something that's a cross between the two.
Yeah, I mean, I want to get more into the challenges in a second, but as you're saying that, my first thought is, and hopefully this doesn't come off the wrong way, but I'm surprised that there hasn't been more layoffs in the robotic space. It seems like a heavy lift. It seems like there's a lot of capital and a lot of like time to go to market and just first see those revenue dollars flowing in. And I guess I'm wondering if any of you have theories, or probably not theories because it's your business, but why are your portfolio companies, at least, not yet having layoffs we're seeing happening in fintech or in crypto? And I guess that one's for any one of you.
Yeah, I'd be happy to start there. I mean, I think to some degree, the pandemic raised the awareness of the opportunity around robotics, and also at the same time created the labor challenges. And so I think many of our companies were lucky to raise substantial amounts of capital last year, and so have serious runway to go after those opportunities. I think that the need for powering our e-commerce economy, for the need for the next generation of life sciences automation, for ag tech automation, feeding a growing population with less land, potentially with climate change. All these needs aren't going to go away regardless of market impact.
And then on the less rosy side, I can say that I think the layoffs are yet to come. So as Bruce said, a lot of companies have raised during last year or the year before where the market conditions were quite good. And then customers at that point had a lot more cash, and in an economic downturn, the customers will be less willing to be experimental. So they're thinking about cutting costs, and then economics just becomes so much more important during a downturn. So I think that we will likely see some shedding of talent, and I think some of those talents will go to the companies that are finding like the real problems and getting those customer contracts signed.
Yeah, I mean, quite recently we saw DoorDash announce that it's shutting down Chowbotics, and I wasn't sure how much of a signal to really extract from that. And if we could, is there some sort of kind of ripple effect that you imagine that'll have, or did that feel more of a one-off in all of your separate views, I guess?
I would add one comment on the learnings on the robotics market. As I mentioned, I think the a lot of our robotics founders has been learning to adapt to the market, right? Most of them actually came from, say, hardware background, or were originally starting from very exciting technology applications. Then they quickly realized that the market readiness might take you to a different approach. So, for example, we have a couple of robotic startups adapted starting from the focus on developing hardware to focus on more like AI camera approach, focus on the solutions. So a little bit combination of integrated solution with more focus on the software side for the automation value creation. So that's something I think is very interesting in learnings from robotic startups. I see that will continue to evolve.
Right. We are still in early days of robotics, investing in robotic startups just coming out. So in terms of learnings, as we were talking about before, selling a product and not necessarily a custom solution. So basically be able to sell something that is scalable across many different types of customers instead of just solving one customer's pretty specific problems. And then I'd say another big learning is to not underestimate what commercial leadership can bring you. So in terms of having a really technical team in the beginning, that's really typical, right? Like you're having your robotics R&D, but to be able to add commercial leadership in the pretty early on stages so that they can start hiring and training and really motivating a growing sales team.
Yes, we often talk to our portfolio companies about, thinking about which is the customer that's going to make them famous. Which is the customer, if they really understood the solution that they had, couldn't get enough of it, and it would change their business because they had access to it. I think it's kind of a focusing experiment to think about whose problem can you really solve in a way that has never been solved before, that will change their business dynamic in such a way that, hopefully a Fortune 100 that can talk about you to, the rest of the industry.
I mean, there's such an interesting example here with a shared investment between Bruce and Kelly, which is Agility Robotics. It most recently raised in April 2022, this year. And it was co-led by both of your firms, which I want to talk about the timing there, but to continue with what you're saying, Bruce, Amazon was a huge investor in that round. It was one of the first 5 investments from Amazon's new $1 billion fund that's dedicated towards robotics and the future of automation. And so kind of bringing together that and your example of when do you kind of bring on a partner that's going to give you that stamp of approval that really changes the game? Did it feel like how did Agility Robotics know it was time to bring kind of that kind of partner on board?
Yeah, no, I think it's a great question. I mean, Agility Robotics is a very rare bird. I mean, we've talked about how we don't like horizontal opportunities, and yet, fundamentally, Agility, a humanoid robot that can do pretty much anything physically from what a human can do, not from from an intellect point of view, obviously. We all understand that someday robots will do all the dull, dirty, and menial tasks in industry. The question is when. And Agility has really created a breakthrough set of technologies that makes a practical robot that can actually deliver that capability now, but no one believes it. And so, because it seems too futuristic. And so having a customer and a seal of approval by someone like Amazon really changed the way the industry thinks about robotics. We thought was important and just the right time for Agility.
Really, anything to add there? I think sometimes when I see a number as big as 1 billion and I see a corporation, any corporation's venture fund, Amazon included, I always wonder as an investor, do you view that as competition or do you view it as, purely complementary to you as well?
Right. I would say that we think pretty practically in terms of the amount raised, right? Like when you hear those large numbers, for us, it's really important to have customer contracts on the other side of that. So once you're raising that money, you're putting it to use somewhere where you're actually building. So to be able to raise large amounts of money that we've seen other robotics companies for maybe not customer contracts on the other side, doing a lot of R&D, like that's pretty risky. And then for us on the agility side to be able to be backed by real and substantial customer contracts, we're quite excited about what will be built in the coming years.
I wanted to save the exit conversation a little bit towards the end of our chat, but it is making me think about, with Amazon on its cap table and Amazon being a huge acquirer of startups, especially in the robotics world. Does that feel like the best exit option for Agility, or is there another route that you think that they're considering or you're considering?
We have very big dreams for Agility. As I mentioned, we think that they can start in warehouse and logistics and really grow to being a practical robot for almost any menial task replacement. And to that end, we think that opportunity is much bigger than even the insatiable demand that Amazon has for labor.
Helen, would love to bring you in here, especially when it comes to helping and deciding if a company should take on a corporation as either an investor, a partner, just a customer. How do you kind of navigate all those different routes that a startup could go down?
It's an interesting question. We always suggest, in the beginning, take on any strategic partnership as you can, because it's early stage that give you a signal on the market demand. But in the meantime, probably want to balance as you don't want to customize your solution just for one customer, right? You still have to looking for the widest market you can penetrate. But in the beginning, any kind of corporate strategic partnership, we see is a plus.
Are there any cons or red flags that startups should be looking for when it comes to a corporate partnership?
Definitely. I think if that corporate partnership requires you to completely customize your solution for that partnership alone, that could be a red flag, right? Because that will drain your development efforts. It will also drain your product roadmap. It's make it all, you solely focus on this effort being too customized a solution. That might be something you need to watch out for.
Yeah. Okay. That's interesting. And I guess it's like, I think about all of you are generalist investors with a pretty specialized focus in an interesting way. We've seen Tiger Global and SoftBank also dig into the robotics world. Does that feel like a net positive? Are you paying attention to how they're investing as, obviously people that have firms that have an insane amount of assets under management?
For the sector, as Kelly mentioned, is still early, right? So it's probably a good thing for the large amount of capital players coming. But in the meantime, we will just hope though that amount of capital investment guides the market development in the right direction, not sending the wrong signal about, this is how easy the capital can be obtained. So that part, I think the founders still have to be really pragmatic about exactly how you're going to make it on your own, right? How in the end, you have to be cash positive. So not completely rely on burning capital to penetrate the market. That's one thing. Ultimately, is that the company itself has to be sustainable.
Yeah, Kelly, Bruce, would you agree with that characterization on Tiger Global and SoftBank's involvement in the robotics world?
Yeah, completely agree that the company itself has to be sustainable, to Helen's point. And as we're looking at an economic downturn, some of the trends that you'll see in the public companies that perhaps have hardware are that margins become increasingly important. So if you think about early stage robotics, like people aren't thinking substantially on that. They're thinking about customer growth, growing the top line. But if you're getting to the mid stage and growth stage of robotics companies now, if you're comping it to your IPOs, then you need to start thinking about having healthy margins and how do you keep growing those margins in comparison to revenue.
I completely agree. I think, robotics and deep tech opportunities are very different than your typical SaaS software. Buying customers is never an option. You have to be delivering value from the start. You can't, make it up in scale later.
Yeah, I mean, it's like it's two sides. There's one part of me is like, okay, this means that we're going to start seeing more sustainable, but what about less experimental companies in this sector if they have to focus on margins earlier or focus on kind of having those customers sooner than later? And I guess, Bruce, when that comes down to how it impacts how you scout companies and how you look for potential opportunities, do you feel like you first start with the problem, or do you find a solution and see if you're kind of convinced that the problem is big enough to be answered?
I mean, we're really all about working with entrepreneurs to commercialize breakthrough technologies, but always focused on big market opportunities. Technology for technology's sake just doesn't get you there because the runways, it takes too much time and too much money to get to the end. And if you're not focused on a big market opportunity, ideally one that's going to, change the world, create the future we all want to live in, and make the world a better place, like feeding the world, it's just too hard a path. And we've brought, personally at Playground, we bring a team to the party because it is hard. Commercializing deep tech companies is one of the hardest things to do. And so we have a world-class operations team and a technology team to help them avoid many of the pitfalls we've made in our own careers, and ideally, focus the capital on and energy on new mistakes instead of paths that have been tread before.
It's been a fascinating part of this macro environment and venture getting so much bigger, which is the bar and what VCs have to offer is so much higher than just capital. And so that's what that kind of reminds me of. And I guess, Helen, in the seed and Series A world, you may not need as much proof yet when they're pitching you. And so do you similarly kind of staff up to help them answer these commercial issues and find these partnerships? Or are you finding yourself on the venture side having to offer a different suite of services?
I think I largely agree with what Bruce said. And you have to start from focus on a massive market opportunity. What we see a lot of robotic founders, really highly intelligent technical founders, they tend to be more focused on technology push. But we will be, so on day one, we'll be focused on venture discipline called you have to be venture fundable. So we want to see an 18 months product roadmap, you can go to scale. So that would often to have to make them adapt a little bit about their product roadmap. The other, of course, a lot of early days need a lot of help in terms of critical talent. Right? Quite often you have two founders out of one lab or one specific area. Then how do you handle enterprise sales? How do you handle large strategic partnerships, including continue diversify your product roadmap? All those areas they might need help. So I think being early, we're happy to be value add in shaping the company's path forward, hopefully making it faster and easier, smoother.
In the last few minutes here, I would love to kind of talk about the wish list that each of you have in terms of what robotics looks like in the future, or something that you kind of are hoping starts to materialize, whether it be more capital or, another $1 billion fund from Amazon. I would love to go in a round robin format. So maybe Kelly, Bruce, and then Helen. What are you hoping to see in the next year coming out of the robotics world?
Yeah. Oh man, there's a lot. I'm going to say I'm hoping to see later stage investors that come with experience and knowledge of the hardware sector, the challenges, and more basically more capital in where I see is a bit of a funding gap for hardware and deep tech companies overall. So later stage capital, but not necessarily has to be pre-IPO. So I'm thinking more like Series B, Series C types of capital for robotics companies. And then for your Fortune 100s to look much more internally at processes and think about automation and robotics, because capabilities are there now and they're economical. So for them to be a little more experimental and open-minded with it, because like economics can be from day one makes sense now.
Bruce, what would you add?
Yes, I'd love to see the first, multi-$100 million revenue robotics company. I think there's many folks on the path to that, but I think that showing that, it's not just a great place to invest, but it's actually a great place to make money and to build businesses, and have those prototypes that you can point to and say, I'm going to build another one of those. I think we're on a good path for that. I also think that there's lots of sectors that we can apply robotics to that I think are going to be important. I think that we're going to see more in the onshoring and manufacturing, where we're going to need a new generation of robotics and automation to make that really practical. I think that personally, I'd love to see us sustainably harnessing the power of the ocean for both feeding the planet as well as producing clean energy, as well as potentially delivering the minerals we need to get there. And so I think there's lots of promise.
Yeah, next year, you guys should all come back and we should talk about how climate is part of the robotics conversation. But Helen, to finish it off, what would you like to see?
I would like to see more corporate partnerships, CVCs like the Amazon Fund. Hopefully, there will be more companies come out with robotics funds. So that can be in any sector, right? It can be Coca-Cola. It can be a giant pharma company. Since we have been lately investing more in the biotech, I think a lot of traditional industry sectors need robotics, need automation solutions. Beyond traditionally, we look at warehouse manufacture. They actually should be very broad applications everywhere. Like Kenny mentioned, if we look at the overall supply chain logistics, there are massive opportunities there for robotic company to grow big, to be a magic solution provider. So that we want to see biopharma. We want to see more across the board.
Great. Helen, Bruce, Kelly, thank you all so much for walking me through your world. I know the audience learned a ton, and I definitely did too on funding the future. So thank you. And everyone else, stay tuned for a ton of other fun panels at TC Sessions Robotics. Take care.